Christoph Erven, you are president of Realies France. Thank you for joining us on BiTV.
Thanks for the invite.
Thank you. The pleasure is all ours. In a release sent out last week, Realies stated that, and I quote, faced with the increasing polarization of property markets and thanks to a financial strength that is essential if we are to overcome the current economic climate, Realies intends to expand its French portfolio as part of a strategy of territorial coverage. You talk about diversification in this release as an important axis for your strategy. What will this diversification strategy entail from a geographic point of view in France?
Well, I think we have quite some experience in investing in regional markets. We have always been investing in regional markets, and we're quite successful with it. And I think, especially in the context of the crisis, there will be a lot of good opportunities coming up next year in markets like Lyon, Bordeaux, maybe Lille, Marseille, that are sufficiently big enough, well covered, transparent, and liquid. So this is always very interesting to us. Plus, we have some fund ideas in our head that our investors already approved that they would like, which would focus on growing cities. So this is a subject we're looking on as well. And therefore, I guess we'll be really vigilant about investment opportunities that come up in these secondary markets.
And speaking of opportunities, maybe we can talk about them from a sector point of view as well. Which asset class appear the most attractive to you in the current market environment that is, as you alluded to, quite challenging at the moment for investors?
Yeah, I think what we've seen in the last 2-3 years, especially in this pandemic and post-pandemic context, is that prices corrected heavily on hotels because during COVID, of course, everyone was avoiding hotels, and even though they are achieving record numbers in bookings, the prices are not back on the pre-pandemic levels. So this is an interesting sector to look at. Other than that, of course, everyone is a bit wary about offices, but here you really have to differentiate because there's the prime locations in the big cities are doing really well from a letting point of view. Even from a value point of view, they haven't lost much or at all, whereas the offices in secondary locations are really struggling. So this is office, yes, but only core locations. And then, interesting enough, we've seen a huge boom on logistics in the last years, and now logistic prices have corrected an even higher extent than office prices. So logistics is becoming relatively more attractive, as well as because the levels of rent are growing at a much higher rate than at the office sector. So from a yield perspective, logistics became much more attractive compared to the other sectors. And then it always depends as well on the investor. If the investor is very long-term, very much looking for stability, then the various living residential investment always makes sense, especially with a long-term perspective horizon. So I guess to find really good deals, it's gonna be logistics, it's gonna be hotel, it's gonna be core, maybe core in secondary cities, as I said before.
Okay, thank you. You mentioned also the repricing movement that is going on at the moment. The investment volumes, the real estate investment volumes in France were cut in half in 2023, in large part because buyers and sellers were unable to agree on the values. I'm not the first one to say that. Do you see the market maybe regaining some investment momentum in 2024? Because as Realia, sorry, intends to expand its French portfolio, do you expect to be able to seize some opportunities?
Yeah, I guess so, and I guess more so, even compared to when we talked 2 weeks ago. I think one big thing changed, and that was the Fed alluding to potential interest rate cuts for 2024. And if the European Central Bank acts in the same way, or at least says that the level of interest rate will stay the same, then I'm very sure that there's a lot of capital out there that wants and needs to be invested, and then we'll see much more activity in 2024. So 2 weeks ago, I wasn't sure if it's going to be 2024 or early 2025. Now I'm very positive that we will see a lot more deals in 2024 coming, because at the same time, the investment climate gets a bit more easy to calculate, and at the same time there will still be some sellers that need to sell for various reasons. So this will make a lot more transaction happen than in 2024.
All right. Thank you very much, Christoph Erven. Thank you for taking the time to speak with us today.
Thanks, Ken.
It was a pleasure to have you. And thank you all also for being with us. And we'll see you soon on BiTV.
Thank you. Bye-bye.